I'm Quentin Common, General Manager in France at Sunlight Solution. Today, I want to talk about Agentic AI in insurance operation. Not the hype, not the demo, the operational reality. Today, my question is, can AI help execute business decisions at scale while keeping control, traceability, and human supervision? At Sunlight, we build an insurance core system platform. So when we talk about AI, it comes from the reality of insurance operations. A file to underwrite, a claim to assess, a rule to apply, or even a legacy system to connect. This is where AI has to work. Today, I want to show you how agentic AI can move from isolated use cases to govern decision at scale. Not by replacing control, but by orchestrating agents across real insurance processes with traceability, compliance, and human supervision. We often speak about digitalization as if the hard part were behind us. And yes, in many insurance organizations, paper is no longer the issue. Documents are digital, workflows exist, core systems, CRM, reporting tools are already in place, but digital does not mean orchestrated. A process can be digital and still depend on manual interpretation, local habits, and individual expertise. So the real gap is not paper versus digital. The real gap is digital process versus consistent decision execution. This is where agentic AI becomes relevant, not as an additional automation layer, but to help execute business decisions in a more structured, controlled, and scalable way. For COO, the real question is, how do we improve decision execution across operation? What changes with agentic AI is not just that AI gives better answers. A chatbot answers, an agent acts. But in insurance, the point is not autonomy. The point is orchestration. One agent alone is limited. The value comes when agents are connected to everything you can see here. Data, rules, systems, people, governance. They should also work in heterogeneous landscapes. Because what we need is not just a fast answers. We need decisions that are traceable, explainable, compliant, and obviously aligned with the company policy. It's a new layer of decision execution. And orchestration is what makes this layer usable at scale. Let's take an incoming request. It looks simple, but in an international insurer, it carries many layers of context. Country, local rules, customer, product, or even partner and group policy. Without orchestration, these layers become silos. You lose consistency, traceability, and time. This is why I like this image. The conductor does not replace the instrument. It coordinates them. Agent orchestration does the same. It keeps local complexity aligned with global governance. Our use case 1, underwriting and risk scoring. Imagine a new file arriving. Before making a decision, someone has to check the file, verify the data, and decide whether the case is standard, exceptional, or outside the company's risk appetite. This is where an agent can help, not by defining the risk strategy. This remains a management, underwriting, compliance, and governance decision. But the agent prepares the decision. It gathers the right information, enrich the file, compare it with the guidelines, detect inconsistencies, and also identify weak signals. Then it suggests the next step: approve, ask for more information, or escalate. So the process is faster. The real value, however, is consistency. The same risk appetite is applied with less subjectivity. across more files, more teams, and more patterns. And the decision remains explainable. What becomes interesting is what happens after the underwriting decision. The decision is no longer just the end of the case. It becomes a signal. At scale, these signals become portfolio intelligence. You can see which partners send incomplete file, which product generate too many exceptions, which local rules create delay, and where risk is evolving faster than expected. Then the feedback loop starts. Guideline can be adjusted based on the real operational evidence. So we move from processing file one by one to a model where every decision improves portfolio understanding. This is not only productivity, it is a supervised learning loop for the business. There is also a less comfortable topic, workforce impact. This is not an HR side effect, it's a top management issue. Agentic AI will change how operational capacity is distributed. In document-heavy processes, freeing up 20 to 30% of capacity is a realistic scenario. But the real question is not the percentage. The real question is more, what operating model do you want after AI? If this is not prepared early, roles become unclear, teams protect their current scope, and AI becomes a threat instead of transformation lever. Before scaling AI, management must decide what is automated, what is supervised, what stays human, and which role must evolve. Agentic AI does not just improve productivity. It changes how work is distributed, controlled, and measured. Prepare the operating model early, and adoption becomes possible. Ignore it, and you go straight into resistance. Second use case, claims management. The goal is to separate high-volume standard cases from folders that require expertise, empathy, or control. Simple cases should move fast. Incomplete cases should trigger the right request. After a fraud detection, sensitive or suspicious cases should move to an expert. Agentic AI makes this triage faster, more consistent, and easier to govern. The key point is claim automation is about separating the obvious from the sensitive. And in every case, the claims handler should receive a clear summary. This is where the value is. Human expertise for the cases that deserve it or intentionally requested it under GDPR. It allows better control across the claims flow. This slide carries a simple message. AI value doesn't start with the model you see. It starts with what the organization has made explicit about how the business works. In many companies, critical knowledge is still hidden in expert habits, local practices, undocumented exceptions, or rules that are applied but not clearly written. This is dangerous for AI, because if the knowledge is implicit, AI may look convincing, but still miss the reality of the business. The more this knowledge is explicit, the easier AI becomes to control, audit, and scale. So the business knowledge readiness is not a side topic. It's the foundation for safe agentic AI. This is where process intelligence becomes key. Before automating, we need to understand how the process really works. Not only how it's described, how it actually happens. Because in real life, teams adapt. They create workarounds. They compensate for unclear rules, system limits, local practices, or even partner behaviors. So the first step is observation. Process mining, task mining, and field interviews help reveal the real workflow, where it slows down, where exception appears, and where decisions become unclear. From there, we can build a useful process map showing where AI can help, where humans must stay in control, and where governance is critical. These processes then need to be clarified with a clear evaluation framework to prioritize what should be automated first. And this cannot be owned by IT alone. It requires internal and external intervention. Agentic AI can scale because the organization understands how work is really done. This is what prevents AI from automating this function, and this is what makes automation safe to scale. Let's apply this to a claim process. At intake, we define what should enter the process. Limiting the scope at the beginning is not a weakness. It's how we go faster before expanding later. At assessment stage, we analyze the current workload. Where is the volume? Where are the exceptions? Where does human expertise really matter? At decision stage, we review what happened by entity, country, and product. The goal is to separate what is common, local, or simply an old habit that should no longer drive the process. At closing stage, we secure the outcome. Regulatory requirements, customer communication, partner formalism, and product-specific obligation must be clear. So the point is not to automate today's claim process as it is. The point is to clarify the operating model first, and then scale AI safely. Let me ask you a question. Do you ever ask internally whether AI should be integrated locally or at group level for the biggest of you? Both extremes are risky. If everything is managed at group level, you may limit local relevance. If everything is managed locally, you may limit consistency, scalability, and control. So the right model is probably federated. Centralize the intelligence layer, standards, governance, security, audit, orchestration principle, and learning. Then let execution adapt locally to countries, product, partners, channel, and regulation. This is how you combine group control with operational reality. A governed network of specialized agents, locally adapt, connected to business processes, and able to learn at scale, just like the group itself. That's the end. Let me close this presentation with two questions. Who is accountable for what AI does? And how much decision authority are you ready to delegate? If these questions are not answered, agentic AI will scale faster than governance itself. And that's where the risk begins. So the challenge is not to just launch AI projects. The challenge is to build an organization that can continuously adapt. Because transformation is no longer a project with an end date. It's a management discipline. Thank you very much.